If you invest in global tech companies, Accenture has probably crossed your radar. It's one of the world's biggest cash generators, a giant with over 700,000 employees that basically designs and runs the digital backbone of the planet's largest corporations. An investment that, historically, seemed bulletproof. But what if I told you that the very model that built this empire is under serious threat for the next decade? In today's video, we're going to look beyond the next quarter. We're going to analyze the 5 big structural risks that could change Accenture in the next 10 years. If you're a shareholder or thinking about buying ACN for the long term, the third risk in this video should make you pay attention right now. Risk 1. Cannibalization by generative AI. Let's get straight to the point. What's at the heart of Accenture's business model? It's called headcount-based billing, that is, charging for the hours worked by its consultants and developers. The more lines of code that need to be moved or tested, the more people Accenture hires, and the more it bills. The number one risk for the next 10 years is cannibalization by generative AI and autonomous agents. Agentic AI tools are automating tasks that used to require armies of junior programmers, database migrations, system testing, and basic coding. The risk here isn't that Accenture doesn't understand AI. It does, a lot. The risk is that the corporate market starts demanding fewer hours of traditional consulting. New AI-native players, or even the service arms of model creators like OpenAI and Anthropic, could start delivering the same results with a fraction of the ecosystem that Accenture carries today. Risk 2. Pricing disruption. This leads us directly to the second risk: disruption in pricing models and pressure on margins. If technology allows a project that once took 1,000 hours to be done in 50 hours, Accenture can no longer charge for time and materials. It must switch to contracts based on added value or success. The transition to this model is risky. If the company can't capture the financial value of the efficiency that AI generates, we'll see severe compression in the company's operating margins. Also, to stay relevant, Accenture is forced to continue a massive treadmill of mergers and acquisitions, M&A, buying dozens of smaller software boutiques every year. If the return on invested capital, ROIC, starts to fall because the market is pricing services down, the premium the market pays on stock multiples will disappear. Risk 3. Geopolitical fragmentation. Remember I said the third risk was the most concerning for the company's structure? It's called geopolitical fragmentation and protectionism. Accenture's big competitive advantage in cost efficiency has always been its global delivery network, which relies heavily on offshoring. In practical terms, closing contracts in dollars or euros in the United States and Europe, and directing heavy development to competitive cost centers, mainly in India. But the world is changing. The increase in global tensions, data sovereignty policies, like those required by the European Union, and governments' desire to keep critical data within their borders, are forcing the market to adopt nearshoring or friendshoring. If Accenture is prevented from using its global workforce fluidly and has to decentralize its operations into strictly local structures, operational costs will rise, and the flexibility that guaranteed growth over the last few decades will be severely affected. Risk 4. Reskilling cost. The fourth risk is with people. Managing the human capital of a company with almost 1 million employees is a brutal logistical challenge. The risk here is the speed at which technical skills become outdated. In the past, a programming language or an ERP system like SAP or Oracle dominated the market for decades. A consultant would learn it and be productive for a long time. Today, the life cycle of a technological skill has plummeted. Accenture takes on the gigantic financial risk of having to reskill, continuously retrain hundreds of thousands of employees at the same time. If it fails in the timing of this transition, it will be left with an inflated payroll full of professionals misaligned with what the market wants to buy, leading to expensive structural layoffs and labor friction. Risk 5. Cybersecurity and civil liability. Finally, the fifth risk involves the very reputational survival of the brand, civil liability and cybersecurity. Accenture isn't a marketing agency, It deals with the core, the operational heart of banks, insurers, governments, and multinational healthcare companies. When it designs a client's data architecture or AI models, it takes on monumental legal responsibility. If an AI model implemented by them leaks sensitive data en masse, or if it presents an algorithmic bias that generates billion-dollar lawsuits for the client, guess who will end up in the dock? Catastrophic cybersecurity failures or implementation errors in critical systems can destroy Accenture's most valuable intangible asset: the trust of being the trusted advisor to the world's largest companies. What's the conclusion for us, investors? Accenture's big survival test in the next 10 years will be its ability and speed to transition. It needs to stop being a company that sells labor-intensive technology and become a provider of high-value intellectual property and an orchestrator of autonomous ecosystems. Does it have the cash to do this? Yes, it does. Does it have a track record of execution? Absolutely. But the fundamental investor cannot ignore that the tailwind that has driven the stock for the past 20 years has changed direction. The barriers to entry in the sector are changing, and the price you pay for the stock today needs to include that margin of safety for the next 10 years. But now, I want to know your opinion. Do you think AI will destroy Accenture's model, or will it use AI to become even more profitable? Leave your comment below. Don't forget to subscribe to the channel for more in-depth analyses of global companies, and see you in the next video.